Morning, good morning, good morning. Thank you for joining this morning. This is Vinney and Bo's show. Some of you might know me, Vinney Chopra, and my partner, Bo Eckstein. And we come to you live at 9:30 Pacific, which is 12:30 Eastern, every Friday. Thanks for joining.
And I think, Vinney, honestly, we at some point we're going to start a affordable housing multifamily division underneath Monell Investments. I'll run the division.
Wow.
We'll have a nonprofit component, and we'll help.
Wow.
We could probably help this in a big way, really.
I would love that. I would love that.
Yeah.
It's been an exciting week. I hope it's been for you also. Bo, you have some questions, but yeah.
Oh, yeah. Yeah, I got a lot of questions.
How are you, brother?
Good. Good to see you, Vinney. Good to see you, Bo.
Oh, thank you. Thank you. We are so privileged to have you.
Hey, Vinney, real quick.
Yeah, bud.
All right, I'll bet you sushi that you don't know what does SAS stand for?
Hi there, everybody joining us, watching us. We are live in 7 channels actually today in the YouTube, in LinkedIn, in Facebook groups and Facebook. Thanks again for liking the show. Please give comments, share, and we are here for a very big show today. Hi there, guys. This is Vinney and Bo show. Actually, we had some technical difficulty today. So we are, recording our very great friend and a great host, our guest right here today. Eng Tang is in the house. And today we're going to talk about Bitcoin mining. Look at where the stock market is, ups and downs. And people are losing money left and right. I know Bitcoin is also seeing some up and down in the Ethereum, Bitcoin, Luna, Rune, you name it, all this, and Dogecoin and everything. So today we got an expert right here on this show, and we're going to be talking about cryptocurrency, Bitcoin mining, and everything. So stay tuned, and please share this episode with all your friends and others. Let me kind of introduce you a little bit. Eng is an experienced real estate investor with close to 300 million portfolio in a short period of time. Under management, he has 12 years of real estate experience and has focused on cash flow investing to create significant passive income. He's an economist by training from a Wharton School of Business, and he's also got the experience in leading data science and analytics at Apple, Capital One, and AT&T. He applies that experience and for underwriting investment opportunities and markets. Eng, welcome to the show, brother. Welcome. And it's such a pleasure to know you and, your humble beginnings. And I think you're going to just charge the audience today. And again, tell us more about you. Who is Eng Tang?
That's a deep question. Thanks for having me, Vinney and Bo. I'm very glad to be on and to be able to speak to your audience. I've admired Vinney for a long time, and we've known each other for quite a few years. We used to be neighbors. I moved down to San Diego to get better weather, but right now it's actually kind of cloudy. So who is Eng Tang? I like to start back all the way back to where my humble beginnings come from, similar to Vinney, although I think Vinney's beginnings are certainly a lot more impressive. I was born in a refugee camp. I was born in a refugee camp in the wake of the Khmer Rogue and the Cambodian genocide. Heavy times, of course, but it's more of a story of my parents and my family. I came here when I was 3, and we grew up very poor. But luckily, I was very good at math, very good at understanding data, and I went to Wharton, day traded, played poker to pay for my college tuition, and just worked a lot of odd jobs here and there. So it's a quintessential American story. I'm grateful for being, for my journey, and it's really made me sort of really gravitate towards what I like to say, predictability and security. When you don't have much, you always want security. And when you grew up very poor and you don't have you want to get that predictability. So for me, I wanted to, bring my parents out of poverty. And that meant using my skill sets and going into investment banking. Now, unfortunately, during the time, a few years later, there was a financial crisis in 2008, which led me into sort of my additional journey of finding that the monetary system and the economics just doesn't work well for most people. I saw my 401k drop by 60%. I mean, the market's down significantly now if you bought, last few months. Um, and what I didn't like as somebody who, struggled for money for a significant part of their life, I didn't like seeing anything go down that much. It was always kind of worrisome. Um, and so for me, I gravitated towards real estate. Real estate was passive income. It was, for me, it wasn't passive initially, but it was income. It was sort of this $1,000 a month check where regardless of what my life was happening and where my financial situation was happening, I could get that check as long as it provided great homes and for my residents. So I bought a house, bought a triplex, bought a quadplex, bought kept buying. During a very good time, I should have bought more. Save, bought, refinance. Did the whole Burr method. Even had a chance to go to Peace Corps where I met my wife. It was actually in the Republic of Georgia, a year after the Russians invaded and annexed Abkhazia, or sort of part of northern Georgia. So it seems like a very familiar times with the economy and the Russian invasion of Ukraine. It's all deja vu to me. And then during that time, I actually started getting into actually Bitcoin as well, sort of as a technology, and not really thinking that it would get anywhere here. And so for me, actually, Bitcoin price, I am kind of like, don't really think too much about it because it's all kind of up for me. I bought such a low basis and I had so much Bitcoin. But uh, what I did after Peace Corps was I got back into the corporate America grind. Wanted to prove myself, make a life for my family, my new family, and I joined a couple. I joined Riot Games. I worked on a private equity company, and then I joined as executive at DirecTV and AT&T. Then I finally joined Apple, where I led product on both the iPhone side and Apple Music, and helped create Apple TV. And then I worked on Siri. So a lot of odds and ends jobs. I wouldn't say jobs, but a lot of interesting experiences that really gives me the sort of sense that I can do anything, I can get into anything, and during the whole time of working, and I worked for all my life, or at least I felt like that. I've been buying and investing in real estate, and I really like that concept of investing because it's not trading. I'm not a good trader. I tried. It's not in me. I can do math. I can read math. I can do that. I'm just not great at sentiment. I know when I lose money, I have emotional reactions and stuff. And I'm sure many of you guys do as well. So for me, the predictability, the steadiness, the passivity of being able to say, I'm going to go look at this other job because I'm making this much money from my real estate, from my other investments. That's power. That's financial freedom, to be able to choose to do what you want, to be able to essentially take more risks. Because when you're poor, you can't take risks. Risk is just is fatal at times, and and that's sad. It's challenging for most. And so during the last few years of Apple, I really started to realize that a lot of my fellow highly paid engineers and product managers and really smart top of the field folks who were making seven figures and more just did not know much about investing in economics beyond buying Apple stock, investing in the 401k, and because why would they? When you're working, to make the best products in the world to deliver to a billion consumers, the best experience, you don't have time to think about those things. And then you have to raise a family as well. And if you're making, a couple $100,000 in the Bay Area, you feel not rich. It's kind of weird. You're making $300,000 and you feel middle class. You're making $200,000 and you maybe have to get a roommate. It's a weird situation. And if if you're so tied to your job, you're stressed out. You don't have that mental capacity to think otherwise. And there's so many things that, when you're in California as well, when you're working in tech, you make a lot of money. But you got to pay a lot of taxes. And that's the price we pay to live in this
W2 income.
W2
You
income.
cannot avoid the federal and the California tax. They get you 50%.
Yeah, it's very hard to avoid. It's not impossible, but when you're working, you don't really know other people who are avoiding it, or know strategies or ways to avoid it. But when you look at investors, when you look at real estate investors, for whatever you think about Donald Trump or whoever, some rich guys in the Amazon, whatever, they have an army of CPAs and lawyers behind them trying to understand the tax code, understanding everything about how to get themselves at advantage through legal processes, through understanding the law. When the CARES Act, came out after the COVID pandemic, there's many little goodies. If you knew how to apply it, you could take advantage of it. So for me, it was a natural thing that I was always very interested in personal economics. My background is in finance and accounting and economics. I have a degree in economics, and a lot of my background is also in behavioral finance, which is really a study of what incentives drive people to do what. And that helped me, understand how to market the iPhone 6S and 7, and how to grow Apple Music from 0 to 50 million subscribers, and then analyze trillions of records of intent of word data for Siri, and what are people trying to say? It's the funniest thing sometimes, and really I started to and this is when I met Vinney, when I was at Apple, when I was at this nascent person, still in corporate America, still providing still very excited about what I was working on, and realizing that I wasn't just, it was sort of limiting me for at least my dreams of providing really great value to other people in a way that I always loved real estate. I always loved investing. I always loved talking about it. And I realized, and every time I went to every job, my office mate, my cube mate, whoever was around me, my friends, I would talk to them into buying real estate, and they did, and it worked out very well for them. And for me, I also really got into the Apple Real Estate Investment Club. I helped lead that club, and I brought a lot of other valued players into the club, and I realized that there was just a lot of people who didn't know much about this stuff. But then I saw that they were talking to them like they were experienced investors. Other syndicators were talking to them like they knew what IRR and cap rates are. And I realized that you needed to speak to them in a way that makes sense. Yeah, because I'm an engineer. I'm a tech guy. I'm like them, and I am them. And I realized that I could provide really great value just through education. And that's how I started Tozy Capital. It's just an extension of my investment experience and my investment philosophy. And for many people, they have asked me over the past many, many years to invest with me. And I thought it was just too heavy of a burden to, it needs to be very much respected to take someone's money and then to be a shepherd for their money. not until I got a significant amount of confidence and experience of scaling and growing did I do that. And I've been doing that for the last 2 years. We have now, since I started, close to 1,300 investors, and that's 300 million of assets under management. And we've started in multifamily and senior living, like yourself, Vinney, and then more recently, Bitcoin mining started last year. And I want to just highlight why Bitcoin mining.
Yeah.
Bitcoin mining, for me, isn't necessarily a play on buying Bitcoin and its upside, which is true. It gives you sort of that option to participate in the upside. Bitcoin goes to like $500,000 in a few years, or 5-10 years. You don't want to be missing out to say that I should have bought, and then I was too late to buy. What I like about Bitcoin mining is it's dollar cost averaging into Bitcoin. It's predictable yield. And if you think about it and just remove the Bitcoin aspect of it, it's just rental income. You're putting machines to work like houses, and you get rent out of them through Bitcoin. You can take them to cash, and the dollar cost averaging it. You can depreciate the machines like houses, and you can take 100% bonus depreciation. Only this last year, you'll get 100% bonus depreciation. Next year will be 80%. So significant downside protection from taxes. And our cost to mine Bitcoin is close to $12,000, which means that as long as it stays above $12,000, we're profitable. And if it even dips below that, it's only a month or two. I am not a short-term investor. I'm a long-term investor. And these machines and the miners that we're buying are going to last 5 to 7 years. Right now, there are miners that are lasting 6 to 7 years now that are operational. And they're operational because they're profitable. When something's profitable, you kind of make them work. Just like old vintage apartment buildings and buildings. And so when you create a productive asset like this, you know how to scale. I think this is sort of the best way to invest. So that's a little bit of me. I ran on
No,
a
I'm
fairly
so
long
glad. No,
journey.
I'm so excited what you just took us through the whole lane, and it's so wonderful to see where your whole thinking is, and that just excites me. That just motivates me and inspires me, to be your partner, and we are, and we're going to be getting bigger and bigger. So for the audience, like a lot of people are saying, hey, look at the crypto. Crypto is not going to be here. What would you say to those people, naysayers?
Yeah, I think that crypto is this infancy phase. And when you have anything that is sort of it's still debated, it's hotly debated, that's actually when the time you want to invest.
Yeah.
If everyone's agreeing that this is a great investment, you're kind of buying sort of, at the top, and that's okay, that's fine, because it's probably sort of a long way to go. Technological innovation is going to accelerate way faster than anything we've ever seen. And that's what's happening since, the computers were invented in the 60s and 70s. We all thought that air travel and cars were going to be flying cars and whatnot. But what we had instead was mobile phones, TikTok, and, Facebook. And it's all a software information revolution. Crypto is an extension of that information revolution. It's Web3. And if you just follow the developer count, if you just say, where are the smart people going? Where are they putting their most precious resource? Time. And because if a developer can nowadays, a software engineer developer can have an exponential impact. They can release line code, they can impact 1 billion people, and their time to output ratio, or the output to time ratio is so significant, they can make hundreds of millions of dollars in the market economy. But that's not necessarily why they're doing it. They're doing it because it's such an interesting thing in crypto. But crypto is it's so varied. It's hard to say that one crypto is not a crypto, right? Bitcoin is not crypto to me. it is sort of the OG crypto, yes, but it's for me it's real property. It's digital property, and it's actually tax like property. The IRS states that it is property. There are other cryptos that are securities. There are other cryptos that are currencies. There are other cryptos that are technology startups, that are applications. And most cryptos are, for the most part, technology startups where, as you know, being in Silicon Valley, lots of startups fail. And many of them go 100x, but many, many more go to zero. And you never know who the winners are until it plays out because everyone's trying to build and build. There's certainly some stuff that aren't real. And it's hard to understand when there's so much money going into a system. It makes it, it's fraught with danger. But it's sort of like the wild, wild west. And I'm not saying to invest in crypto. I'm saying to understand it, to understand that it will be very much a prominent feature of our future lives because crypto is going to be a technology layer, how we interact and own our digital assets and digital self. Because we're all digital here. We're going to be broadcasting this live to Facebook and whatnot. And that's Web 2, right? We're centralizing things, we're curating things, but we don't own anything on our digital selves. Web 3 allows us to decentralize and own it. And I think that's sort of the next evolution. And then if you look at what's happening in the world today politically, you have a huge Russian embargo. You have SWIFT being embargoed to Russia, and what you're seeing there is sort of the bifurcation of a currency world. It has for the longest time been a dollar reserve economy for the whole world. Everybody, if you lived in Venezuela or El Salvador or in Africa, you would always want to just convert your money into cash and to dollars, not your local currency, but to US dollars. But it could be due to force of law, force of state. You couldn't because they said no, you couldn't convert your currency. But right now, what's happening is we're merging a dollar economy and a yuan economy, RMB. The Chinese is going to become, we're going to be a multipolar world. But there's one more axis here. There's so many non-aligned nations to either the Chinese axis or the American hegemony. And where they go? There's no other fairly large network except Bitcoin. Bitcoin is going to be the third axis.
And there are 21 million total Bitcoins ever should be in existence, right? Yeah.
Yeah. So let's go into Bitcoin and Bitcoin mining. There's going to be 21 million Bitcoin ever released. And right now we have released or mined 19 million. And so we're at this, it goes like this. It pumps up really fast and then it diminishing returns over time. And when it was early, when I was mining, it's a long time ago, I was making a lot of Bitcoin every week. But it's so easy to mine, when things are easy, you don't value it. There's no really use case for it. And then institutional capital came in last year. And then ETFs start launching. And then companies put Bitcoin in their balance sheet. And then all these things happen that really highlighted sort of the additional use cases of Bitcoin as, and then, when now things are to mine Bitcoin, it becomes harder. So when things are harder, it becomes more valuable. You value things more. And so Bitcoin mining is essentially every 10 minutes, 6.25 Bitcoin gets rewarded to one lucky machine miner for solving a mathematical problem that essentially validates the transactions. If you send me Bitcoin, a miner gets a little bit of a tip. It's like the Visa network. You get a little percentage tip. Right now it's like 3 to 4%. Plus you get rewarded a block subsidy. So that's 6.25 Bitcoin. And so we have currently in operations around 5,000 of these machines. And by over the next 3-4 months, we will have close to a total of 17,000 machines generating close to 5 Bitcoin a day.
Wow.
And yeah.
So there's about 900 Bitcoins produced per day in the world.
Yep.
900.
And there's about 1 million from my studies. I knew nothing about Bitcoin until I watched your webinar. Then I started researching it. But so it looks like there's about 1,959,031. Well, that's probably
there's around 2 million Bitcoin left.
Yeah.
Mm-hmm.
So it's a numbers game it's like a race to who can get these Bitcoins essentially.
Yeah, it's if you think about like gold has an inflationary rate of 4 to 5%, which means that gold miners know that they're for a certain price of gold, people will spend the effort and money to mine gold and then release that into the monetary supply of gold or the supply. Bitcoin is fixed. You can't really spend more money to get more Bitcoin. You sort of have because it's still 6.25 for all miners, 900 a day. And that really limits sort of a inflationary problem that most monetary systems have. And if, for those who are looking at the macro conditions of the world today, or especially America, we're having inflation. And what's driving that? Because the Federal Reserve pumped trillions of dollars of new cash, new dollars, new printed dollars into the economy. And that had a significant impact on people's ability to purchase more stuff because their dollars were devalued. When you were saving, if you saved $100,000, 2 years ago, and then the Federal Reserve prints, essentially double that, your $100,000 goes half the way, at least for financial assets. And so, and then now they're trying to, essentially raise interest rates, force you to save more, force you to not invest as much. And not consume. And it's going to be a trajectory that will be at the whims of the political. It's all political, right? If the Democrats are sort of feeling the pinch in the midterms, they might do something. If the Republicans are in charge, it might do something. So it's all like, how can I make the short-term optics work for me, and never think long-term? And so. Yeah. As an investor, you care about predictability. You care that, you rather know what's happening and then act on it. And so Bitcoin is so predictable. It cannot be changed. That's sort of the central thesis and nature of Bitcoin.
And it's going to take 120 years. And we have heard that, right? To get all the rest of the Bitcoins, just because it's only 6.2, just like you said, right? Every 10 minutes, right?
Yeah.
Yeah, I mean, when I wasn't paying attention in this space, and I'd hear it all. My friends were investing in crypto, and now I was interested because Vinney was so interested, and but it's fascinating. And I started to understand it. I think at first people look at it and go, "Well, what the heck," right? Like they don't. But when you really look at it, instead of a physical bank, it's a digital bank, and it's a ledger, right? And so these ledgers are encrypted and they can't be there can't be fraud. It's got like all these trust systems built with it, with these records. So it makes sense once you kind of dive in. And but I always just kind of put blinders on it. But now that you guys are talking about it, and I see it and understand it a lot more. I mean, it's just a whole new world, right? So it's pretty fascinating. How did a company like Block One? I was reading they have 140,000 Bitcoins. How did they get it? Were they just early on in the game? A company like that, Ing?
Yeah, they were early on in the game. And so there's such a I would imagine around 4 to 5 million Bitcoin is sort of lost. So even though there's 19 million Bitcoin, it's 4 to 5 million Bitcoin is estimated to be lost because somebody's mom threw their laptops away, or somebody passed away or had amnesia or dementia, and crypto, the central thesis of crypto, and at least for Bitcoin, is decentralized, which means that only you have this key to this virtual block box called blockchain, the ledger, where if you forget that key, I mean, it's no one's going to be able to access it regardless of what happens. It's just going to be lost to the world. So the supply of actually Bitcoin that's circulating is probably 69% of Bitcoin is probably has never moved ever, which means that essentially people are having Bitcoin and they're never going to move it. It's all public too. It's all you can go to the ledger. So it shows, first of all, this people who have Bitcoin are so strong believers of this future, and it also shows that Bo, you haven't been exposed to Bitcoin or you heard of it but don't know too much about it, and that's just most people. That's okay. We're early. It might seem like, hey, it went up in price so much, but you could have said that about Amazon in 2002. Like, oh, went up in price so much, 2003, right? Was it too late? You could have said about Tesla like 10 years ago. Is it too late? And so you just got to look at the wider adoption. How many people know about Bitcoin? How many know people use in the use case? The nature of Bitcoin is really about the nature of a hedge against the Federal Reserves and the central government's control, and it's sort of born from that, born from the 2008 crisis, where all of a sudden you can see that all this money is kind of this economy is just sort of controlled and kind of fake in some ways. Now, I'm not trying to be talk necessarily about Bitcoin as thesis. If you don't care about Bitcoin at all, I think Bitcoin mining presents sort of just a good investment, and you care about just cash investment, which is fine because we all live and pay our rents in cash. Then Bitcoin mining provides cash because Bitcoin is a liquid asset that you can just trade. So yeah.
No, I was. Oh, go ahead. Go ahead.
Yeah, no, I was just reading an article that BlackRock was getting into the digital asset space now. So they're pretty large.
From the real estate side, from the real estate.
Fidelity is exploring offering Bitcoin to their
yes
to their 401k employee base, or not the employees but the employers that use Fidelity, and I'm sure many of you guys who have jobs have Fidelity 401k or is one of the biggest 401k providers. That's going to access a lot of potential investors. I mean, a 401k is probably one of the best vehicles to actually own a long-term investment vehicle. And I think of this as long-term investment. If you think about buying Bitcoin and it goes down 5%, up 20%, which is all it happens every day. It happens today. It went up 5% yesterday, went down 4% today. It's just the nature of an emerging asset class. But if you have a 5-year window, a 10-year window, and if you're in 401k, you probably have a 30-year window on these things. And if you can get it in sort of a tax advantage way, I mean, that's amazing.
For sure. And also, the thing is, there are a lot of studies. It might be 500,000. I mean, it's not really, in the scope of, saying it will happen when. We don't know. But what it's today, 28,000. It came down from 65 down to 28. Could you kind of throw some light on it? Why it's down so much, and how would it go so high?
Yeah, I think it's a function of sort of liquidity drying up the markets, right? Which is down from as high, same as the equities market's gone down. There's a lot of money on the sidelines. People are trying to find the bottom. And that's part of the trading, right? So trading and short-term investing impacts Bitcoin right now because there's just a lot of money flowing in and out, and there was a lot of leverage. So a lot of the leverage is being washed out. If I started thinking about Bitcoin mining when it was at 20,000, so it was everything kind of gravy for me. And when I think about sort of the price potential of Bitcoin, I'm thinking of, yes, 500,000, but even more. But my long-term goal is to have 1,000 Bitcoin and to have it valued at, let's say, $500,000. It's a lot of money. So what do you do with that? Well, you do it like real estate. You can loan against it. You can leverage it. And if you take a 50% leverage and you can borrow against it in tax-free distribution, you live off your life. I know billionaires of Bitcoin and Ethereum who live off, who never want to sell because they're long-term hardcore believers of it, but they take interest-free, not interest-free, but tax-free distribution loans just by taking leverage out of it. And especially if you take it safely, then I think it can work. So there's a lot of really interesting ways to use Bitcoin as an asset, as a property.
Surely. Could you kind of throw light? I know thanks so much for your time and what great information you have shared. So Bitcoin mining, I know you have done few funds already, very successful. You're paying millions of dollars to the investors. And I know you and I have started a $20 million fund. It's a 506C fund. So everybody, we can talk about it and everything. So can you throw some light why for somebody to just put money in that is a great avenue for them to diversify,
Yeah. So if a lot of investors, a lot of very famous and rich investors, not counting Warren Buffett, probably have like 1 to 5% of their wealth in Bitcoin. And what I advocate is to have diversification. I'm not saying to invest in Bitcoin, buy Bitcoin. I'm saying to invest in things that have predictable cash flow and have great tax advantages, right? Keep more of your earnings. So when you invest in Bitcoin, our Bitcoin fund with Vinney, you're essentially being a limited partner in a operating company. The operating company has P&L. The P&L is from the generation of Bitcoin, and the loss is from the depreciation. And that P&L, last year we had investors come in, and just for 6 months of operations, for 6 months in 2021, they earned 50%. And they earned like 8% a month, 9% a month, 10% a month. And this is a month, not a year.
Yeah.
And yes, Bitcoin price was up more, right? So of course, if it goes down, you're not earning as much. But if it goes up, it goes up more. And I want to highlight, if you don't mind, let me share my screen.
Please.
Just to make it a little more real for folks. Can you see my screen?
Yes, we can.
So I want to highlight some of our machines. So right now we have in this one of my many accounts, 4,281 machines. And I want to show you sort of our total earnings. So we've earned 106 Bitcoin since March
of this year.
Of this year.
Wow.
And if you look at, let's say, one of our, this is sort of what happens. We have in this one specific pool, you have all these workers, and you're making this much Bitcoin every day, and then it goes down in this heat because it runs hot and it takes energy. But you can see that it basically makes a lot of Bitcoin every day, and it's very predictable. This is how much Bitcoin we earn, and on a daily level, we earn 1.4 in this account. Another account will have half Bitcoin. So these are all like ways I look at Bitcoin. It's just machines. They have essentially a production value of it, and we try to make sure that they run smoothly and efficiently. So it's just industrial mining using capital at scale. Bitcoin mining is all about getting as cheap of a power as possible. And what I love about Bitcoin is that it actually is one of the best ways to monetize energy that is not easily transmitted. Yeah, of 100% of all energy that's produced in the world, 33% gets lost to transmission. Because if you have like a hydro dam in the middle of nowhere, you have to send it hundreds of miles to the nearest population center. Bitcoin mining can just be at that remote place. As long as it has a little satellite link or internet, the fiber, whatever you need, you essentially can mine Bitcoin and can reduce your transmission costs to nothing and reduce your power costs to a third of most power consumption. And so our miners are right next to a solar power plant, right next to a natural gas generator, right next to a natural gas flare site, an oil flare site, where that's essentially just producing energy that is not being used at all because they have to flare gas. We literally taking energy that would have been wasted and capturing it and using it. It's right next to one of our sites is right next to Niagara Falls.
Oh, yes, yes.
We're using hydro renewable energy and we're getting it as cheaply as possible because that allows us to mine Bitcoin for as cheap as possible because Bitcoin is 90% of all of our energy is 90% of our costs of Bitcoin.
I thought I'll just show this right here, your own presentation, right, Ang?
Yes.
So we are into all these, and you were right there in Texas last week, brother. And
yeah,
you
I was
sent
in
me
Texas
some
last week. We're visiting our new sites. And very excited to start launching operations in the next few months.
Yes.
I actually think that this down market right now is actually very favorable for us because it allows us to essentially reduce market entrance because we've got such a low price point. If you think about it, like if your energy price is so low, where other miners are essentially the price of energy is slightly higher. They might not be profitable at 25,000. So if they get offline because of the zero sum game of this investment, you're essentially getting more Bitcoin when now your Bitcoin is worth less. But if you're a long term holder, you just care about how much Bitcoin you get. So it's a really interesting investment vehicle where you get, you essentially, and Vinney can share the recording of the webinar and everything.
Sure.
Where we essentially, take all the benefits of scaled industrial energy consumption, and then produce Bitcoin from it. So every day we mine Bitcoin as the slide shows, and it goes into our wallets. And then every month we sell Bitcoin. I don't love selling at this price, but that's okay. It's a profitable venture. It's 50% profit margins right now at today's price. It was 70% earlier this year. It was 85% last year. But I'd love to be in a 50% profit margin business. And so this is a picture of our,
yes, the miners, so many miners. Yeah. Yep.
So you mine for, let's just say 12,000 per Bitcoin cost wise.
Yeah.
And then you sell, and then that becomes the cash flow for
Yep.
the investors.
Yep. And then we provide cash flow in the form of Bitcoin or cash. So that means that we get we give people the option to essentially get the distributions in cash or Bitcoin. 80% of our investors actually choose Bitcoin, so we send Bitcoin every month to them. And so they're just, I love the fact that we're introducing Bitcoin to so many people to be able to essentially have the capacity to understand what this future looks like. And we're all in this together. We're all early. And the technology is very interesting. And if you see the amount of talented developers, the amount of smart people getting into this space, not because they're snake oil salesmen or they're trying to make a quick buck, because you're seeing billionaires get into space. You're seeing Jack Dorsey, who, essentially runs very successful companies, basically go all in on Bitcoin and say, this is what I want to do for the rest of my life because I believe in this future. And you're seeing a lot more people like that, a lot of developers, a lot of people who are leaving Apple and Facebook and Meta and Google to essentially work on the future of crypto. And Bitcoin will be one of the prominent parts of it.
Is hash rate essentially the speed at which these computers solve the puzzle for the Bitcoin? Is that kind of accurate, or am I off? I don't understand hash rate.
Oh, hash rate.
Yes. So hash rate essentially is the unit of measurement that our investment essentially puts out. So if you're a miner, essentially that's for X amount of hash rate, you get X amount of Bitcoin.
So it's like efficiencies.
It's not necessarily efficiency; it's productivity.
Productivity.
Every miner going forward is a little bit more efficient and a little bit more productive. But it's not like Moore's law where it doubles over time every year, because because of the nature of sort of the silicon chip supply. There's lots of constraints to Bitcoin mining that I find interesting, both the energy constraint, the production of the miners themselves, meaning the silicon chips that go into them, because we can't just hoard all the silicon chips. As you've probably heard of supply shortages, those cars that aren't being produced because they lack the chips to make them into today's vehicles. And so if Bitcoin goes, what happened in 2020 to 2021 was Bitcoin price went up by close to 10x. And I believe that cycle will happen in the next, relatively shortly as well. But Bitcoin mining competition went up by 2x because you can't just deploy 10x more miners. It's not possible, not physically possible, not logistically possible. So this natural barriers to entry, which makes it very interesting. And you also want a competitive moat. The competitive moat that we've been doing is securing all these cheap energy contracts last year. Foresaw sort of a rise in political instability and heightened energy prices. I've invested in oil and gas this year and earlier this year because I knew that this is going to be a thing. And so for me, seeing these trends, I'm a data guy. I follow data patterns analysis. I'm not a forecaster. I just follow the trends, and I know that this trend will continue.
So it comes down to operations at the end of the day. It's not just buying the machine, the miner. It's really the cost of energy. I mean, it's a lot of skills that go into it. Yeah. It's kind of, this is opening my eyes. I'm kind of getting it now. just like in a multifamily investment, right? It comes down to the operator too. How they work with their property managers, how they're able to do the rehabs, how they put the right finishes in, move rents up. I mean, there's an art to Bitcoin mining. It's not just you buy the machine, and the more machines you have.
I try to make it simple.
Yeah. That's enough.
We are so fortunate to have the king of Bitcoin mining. I'm telling you, and I have been so impressed with all the things, that you have put together and you are producing. See the results. It's the proof is in the pudding. And I'm so happy you could join us today. And I would like to tell everybody to just, email me, email Ang, or email Bo. And also go to the portal. Portal is ready. I know that one slide said it's getting ready. It's ready. And it's that https://monil.invportal.com. And you could find these videos, and we'll put this video also there. This came out really nice. And also we'll be putting it into a podcast and putting a live show. Today we had some technical difficulty between Vinney and Bo show. We're going to upload this also. So please reach out to us, like us, comment, and share with your other friends. And thank you from the bottom of our heart for having you here. And again, we'd love to have you. This is something which can really change the game for lots of people, because we are losing money. Inflation is cutting down our buying power of every dollar, every $1,000 and $100,000 and everything. But this can bring 3 to 5 to 6% per month, guys, per month. What will that do to us, right? And any last comments, brother?
Yeah, that's exactly right. Even today's prices, we're targeting 3% a month. And just imagine when it goes up, right? The best time to invest is when it feels that is not the best time to invest, because that's when you can make the most money. The best time to buy real estate for me was 2008, 2009. Yeah. And I wish I bought more of it. And sure, I wish I bought more Bitcoin. Probably sold more Bitcoin than I would have loved to. But investing in Bitcoin mining allows a sort of the second chance for me, and I hopefully provide that opportunity to all you guys. And really want this to be an educational journey. It's a partnership amongst all of us. And Vinney, thank you for your partnership. I really appreciate you.
Thank you. I appreciate you. Again, thank you, everybody. We'll see you next time, and have a wonderful, wonderful rest of the day. We'll talk to you again.
Happy to be on your show finally.
I'm a long time fan.
very, very invested in our community.
It's wonderful to be here.
This is Chopra and also my good buddy, OXC. And we are so happy.
It's amazing what's going to happen. So, we ramped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
Oh, I know. So excited to come live to you all. Live 9:30 every Friday. How to take your business to the next level.